All right, so picking up back from where we left off is going to be because we live in the state of Nevada, there is no state taxes. Awesome. How about that? Okay. However, we are subject to a few federal taxes that are obligated, right? And federal income tax is one of them. Okay, also known as FITW. All right. So this is a federally income tax that you need to claim. And this has to do with, again, your W-4 form. So that's why we talk very extensively about our W-4 form, because this tells the employer how much tax to withhold from your income tax. Okay? So with that, this is how we're going to actually compute this, right? So this is for all common law employees. So again, once again, the higher the wages that you earn, the more higher taxes that you belong into. So therefore, you got to pay more higher taxes. Okay? And of course, with your W-4 form, right, the more the deductions that you get to claim, then the less taxes that you get to have to take it away from your paycheck. Okay? And of course, here's the fun part. Every year, you get a set of new tax laws. Okay? So once again, every year around November, December, the government starts talking about what do we need to charge our taxes, or what levels, right? If the income tax or the minimum wage has increased, therefore taxes also increase. So, yes, so of course, like I mentioned before, it really depends on your job as well. So if you're claiming the highest bracket, no claiming anybody, the more money that you make, the more taxes that you're subject to pay. Now, of course, with the federal income taxes, there are two methods on how to determine your FITW, right? We're going to learn today only one of them, but there are two that exist, okay? And on top of that, so we have the percentage bracket, or I'm sorry, the percentage method, which, again, I'll show you exactly how it works. But what you're going to do is you're going to calculate your grand total amount of earnings, right? And then you're going to look in what the number of claim withholdings or whatever the form says, right? If you claimed X amount of income that you've earned, including your spouse, then you have to add that in there. Any extra deductions, you need to subtract those out. And then you're going to get what's called a adjusted income wage, right? Then you're going to take that number and you're going to look in your chart to see which percent you fall in. And then from there, I'll tell you how to calculate that in a second. But it's going to be based on, one, the amount that you earned, two, what kind of payroll period you're on, and lastly, what kind of filing status. So if you file as single, you're going to be in the single bracket table, okay? If you earn a specific amount, you're going to be in a specific row. If you are on a biweekly, you're going to be on a biweekly table, okay? So we'll talk about this, and I'll show you an example real quick in a second. But second thing is going to be the bracket method, right? The bracket method, right? You're still going to be utilizing these three components, right? The amount that you earn, the payroll period you belong, and the filing status. But however, this one's a little more simplified because instead of having to calculate everything for you, all you got to do is you got to find the number that you belong in, you follow that row, and boom, everything's already calculated for you. You don't have to do much. But because it's too simple, I'm not going to teach you that one. I'm going to teach you the more harder one, okay? Because in this kind of sense, the percentage method is what most companies actually use. They primarily use this a little more than the bracket method, just because the bracket method gives you like a rounded number, which once again, government doesn't want to do that, especially your company doesn't want to do that. They don't want to round their numbers. So what they decided to do is they want an accurate, actual down to the decimal penny amount. All right, so that's what the percentage method does. So let's go ahead and take a look. So this is what it looks like an example of a table. But what I'm going to show you is this little, for you to look up these tax tables, right? It's called the circular e-table, and you can definitely find that under the irs.gov/publication 15T for the tax tables, right? And of course, I provided it for you on the Google website. So if you take a look at here, it gives you all the tax tables for the 2021, so the most recent ones, and every year you're going to have to get a new one, okay? So again, these are the tax tables for 2021. So we are going to be looking at utilizing the tax tables for the most recent one. Of course, there are two options you can choose from. So once again, if you go through each little form, it tells you that you could do the percentage method based for automatic payroll systems. So therefore, if you're paying someone to do the tax tables for you, or you're using a automated system, you're going to use that tax table. Okay. Other ones that you can see is wage bracket. Once again, we're not going to use bracket. Third one is wage bracket. Then the fourth one says percentage method table for manual payroll system with the form W4 form from 2020 or later. Okay, so that's the one that we're going to be looking at, is going to be the fourth type of table, right? And then, of course, for those who were working prior to 2020 that filled out a form prior to the 2020 form, you're going to be utilizing the page for number 5, which is using the withholdings to go ahead and calculate the payroll. Now, of course, we're not in the business of looking at old stuff. We're looking at the new stuff because, once again, this is for your future, right? Because as you move on forth, the next W4 form that you do fill out is going to be the 2021. So you can't fill out a W4 form for 2019 when you're applying for a job in 2021. So in this case, I'm going to teach you the one that you can use for the later form, all right? But let's take a look at, like I've mentioned before, right? If we take a look at the bracket tables, right? It's pretty straightforward, simple and easy, right? You can take a look at this and it gives you a step-by-step on how to calculate it. So this form is very useful, especially if you're not familiar on how to calculate it. It's word for word and it tells you how to do it. Now, this is for automated payroll systems, but this is what the bracket looks like. So like I've mentioned before, right? It literally maps out every single dollar, right? And the bracket of it is probably like between $10. So you could be scrolling for hours, right? And it's based on, once again, what kind of filing status are you? In this case, it's filing jointly. So therefore, can't do that. Or this is for weekly payroll. Okay, so if you're at a different table, then you have to scroll all the way down until you find the right table. But look at this. If I make at least $800, I have to go look and find my $800, okay? And I'm getting paid every week, $800. I have to find my amount here, so I'm scrolling. So here, $800, right? I belong in $795 to $805, right? And I'm going to pull down and I'm going to see that the amount that I'm going to be, well, I'm not filing jointly, head of household, so I'm filing as single. So therefore, my amount that I'm going to withhold is going to be $68. Okay? $68. All right? So that's how you use the bracket method. And like I said, this is, rounded numbers. So what we're going to be utilizing is going to be based on the manual payroll system for the percentage method. So I'm going to go ahead and fast forward. But once again, this is a really useful type of form that you want to look at, especially when you are going to be trying to calculate manual payroll. Okay, it depends on which form that the employee sends in. So once again, we're assuming that we're starting our company as of 2021. So you're going to be looking at forms that are 2021 or later. Okay, so here we are. This is number 4, percentage method for manual payroll systems, okay, using the W-4 form from 2020 or later. So once again, this is the page that you're going to be looking on primarily on how to do things. So once again, it's based on how much income that you've earned. You're going to go through step by step, but I'm going to show you this through the PowerPoint, just because this can be confusing if you read it and you're not quite sure what the answer is. So once again, here's what the table looks like. It's based on your marital status once again. So if you're single, then you're down here, okay? Single or married filing separately, right? It's based on the pay period that you're doing it. So again, if you're a weekly or if you're a bi-weekly, then you're going to be on the next table, okay? Once again, filing status, and it's also determined on how much you make per paycheck, okay? So that's pretty much the gist of what the tax table looks like, and you have to get a new tax table every year for every year that you do manual payroll for, okay? So of course, once we take a look at how to compute the manual payroll, you're probably going to figure out that it's probably best that you just spend a little money to have someone else do it for you. And of course, that's what majority of corporations or companies do. Because this is, again, it's going to be very difficult because each individual person that works in your company, they're going to have a separate situation, right? Every W-4 form they submit to you is going to be different. You can have one person who's single that claims nobody. You can have somebody who's single but claims 2 children. You can have someone who's single but claimed a house or something, owns a home, so there's a deduction. You can have someone who's filing married but no children. And then the next person could be filed married with 3 children. Every individual case will be different. So therefore, think about it. If you have 20 employees, how long do you think it's going to take you to go ahead and report or manually calculate their tax withholdings? Okay, it's going to take you a long time. Okay, and that's why it's just so much easier to go through an automated system. It could be a software that can calculate it for you. So we're going to take a look at QuickBooks, at how easy it is to just be able to claim the, right, you just type it in, or it pulls things from the W-4 form automatically, and it just calculates it automatically for you. So with that, again, but I'm teaching you the hard way, the manual way, so you actually know where this money comes from. So again, I talked about the circular E table, and that's going to be what we're going to be utilizing to calculate for this, okay? So once again, percentage method, step 1 says you're going to calculate your total gross earnings, okay? Now, of course, also, you're going to determine by which pay period you are, okay? And again, you're going to determine the total annual income, not from job. Okay, that's the second step, right? So first, you're going to determine the amount of earnings that you made, as well as the pay period. And your filing status, of course. Then 2, you're going to determine the total amount of income that you do not receive from your actual primary job. So once again, we talked about this, right? With the new concept of 2020, they want to make sure that you calculate every single penny that it goes into your pocket, whether it's from your primary job, your secondary, your tertiary, whatever kind of job that you have, whatever piece of income that you can claim, right? Whether it's your spouse's income as well, you need to add it all in here. And you also need to take any deductions. So that's apart from your dependents. So deductions are, if you own a home together, you can take a tax deduction, right? Or if you pay into an IRA instead of the 401k, right? You have a separate IRA for your retirement. That's going to be considered deduction to you. Okay. So once you've done that, most cases, I'm going to make it really easy for you. We're just going to we're going to assume that every person has just one primary job, because nowadays, right, it really depends on the person. Not everybody does Uber and not everybody does Lyft or Postmates or whatever it is, right? And some people, they claim that as their primary job, but for most cases, we're just going to assume that everyone has just one primary job. So this section right here, you don't really need to be too worried about, but it is definitely something that you can consider as calculating as part of your adjusted income. Okay, once you've done that, then you're going to determine the tentative withholding amount. So this is where, once we find the total amount, we add our income and subtract out our deductions, right? That's where we're going to determine, well, how much money should we get per paycheck? Once we determine that, and then we're going to look at our filing status, payroll period, and we're going to determine in our circular E table which percentage we are going to be claiming, right? And then from there, you're going to calculate, right, how much the government lets to keep. Then you're going to determine how much over that you are going to make. You're going to tax it by the percentage, and then you're going to add it to what the bottom line is, which is what they are going to tax you regardless of whatever income that you make. Okay? So once again, I'm going to go ahead and walk through this with you one step at a time. So let's take a look at this scenario here. So we hired Elle, okay? Elle is a single woman, okay, with one dependent, okay? She also, okay, and this is her only primary job. So that's the only job that she's working, is just this, whatever job it is, right? And she earns $15.25 per hour and works a total of 45 hours. So in this case, we're assuming that there is no overtime. She's just claiming the $15.25 per hour, just as is. All right, and of course, the payroll period is going to be weekly, okay? So step one says, let's determine how much she has earned in total, okay? So we're going to take 15.25, and we're going to multiply it by the 45 hours to get a total of $686.25, okay? From here, we've already said that this is her primary job, so therefore there's no extra income she's going to claim, and we're just going to assume there's no extra deductions as well. So for steps 2A and 2B, we're just going to make them as 0 because this is her primary job, okay? So she has no extra income, nor does she has any extra deductions to take away, okay? So now we got to determine the next thing, which is the filing status she's claiming and the pay period, and we got to determine which bracket she belongs in, with the little thing here where it says that did you check mark step 2 in your W-4 form. Once again, that little check mark just tells you, is this income from your spouse or is it not? And if you do check mark it, then it's from your spouse. If you don't check mark it, then it's your actual income that you earn. So in this case, most cases, it's going to be no, unless you are filing together with your significant other, then you have to select yes, okay? So, of course, once we determine these three things, we're going to go straight to our circular E table. Okay, so here, this is what we got to remember. $686.25 is what our adjusted amount of earned income is. Okay, so now we're going to go ahead into the table, right? We are in the weekly table. She is filing as a single person. However, our assumption is that because she has no significant other, right? She's filing as a single person. Therefore, she can definitely be sure that the box in step 2, right? She doesn't have a spouse, so therefore she can't claim her spouse's income. And on top of that, she doesn't have a secondary job. She only has a primary job. So So the check number 2 is a no. So therefore, we're going to be on the left side of the table, right? We're under the single status, filing separately, right? She has no significant other. Check mark in step 2 is no. So therefore, we have to take our $686.25 and go down to row A, or in column A, and we have to figure out, did she make at least that amount? So in this case, we got to roll down. We got to say, yes, she's made at least $433, but she for surely did not make 1,021. So therefore, we got to go back up, okay? So in this case, did she make at least $433? Yes, she has. Did she make, but it's less than 1,021? That's for sure. So we're going to go ahead and we notice that this is the row that we're going to be taking a look at, okay? Now, how we understand row C, D, and E is going to be like this. C says that the government is going to take away $19.20 away from the paycheck regardless of the amount that she earns. Okay? This is an automatic deduction. It's this $19.20. Okay? However, of course she made $800, right? The government's going to allow you to keep $433 as a personal, they let you keep that as whatever money that you don't, that's not going to be taxable. Any dollar over is going to be subject to a 12% tax. Okay? So therefore, we're going to take my $686, right? And this is what we're going to do. We're going to subtract E, multiply by D, and then add C. All right? Now, what the heck does that mean? Well, let's take a look, right? If the government gets to let us keep the $433, what you're going to do is you're going to take your adjusted gross earnings. You're going to subtract out what the government lets you keep. So in this case, we found that bracket, which is the $433. So then if you subtract that from the $686.25, therefore you're left with $253.25 that you've earned over the $433. So therefore this amount right here, the $253, is going to be subject to a 12% tax. So in this case, you're going to multiply the 12% by the number over to get a total of $30.39. Okay? So that's how much you're going to be prorated that is taxed. Okay? And once you figure this number out, you're going to add the amount that the government's going to charge you automatically for whatever amount that you've earned. So in this case, it was the $19.20 that the government's going to take away from your paycheck regardless of what amount you earned. And therefore, the total amount that I am subject to withhold is a total of $49.59. So once again, right? We're going to find the row that we belong in, right? The government's going to allow us to keep Section E. So Section E was they let us keep $433. Anything in excess, so we're going to subtract that from our earnings to get a total of $253. And then that's going to be subject to the percentage. That's the prorated amount that you're going to get taxed at, which in this case, we found out was $30.39. And then we're going to add the $19.20 that the government's going to tax us regardless of what we earn, to give us a grand total of $49.59. Okay? So then, after we figured that number out, the next thing that we got to figure out is going to be on the W-4 form for Section 3, which is claiming any dependents. In this case, it's supposed to be one dependent, not two. So you claimed 2 dependents, supposed to be 1. So we're going to go ahead and click the pay period, and we're going to determine what week it is. And in this case, it's weekly. So we're going to go back to this table, because what's going to happen is on this table, right, the section that you filled out in that the employee filled out in section 3, which is your dependents, right, you're going to follow this through, right? You're going to determine how many children are you claiming. In this case, we're claiming 2. And so therefore, if you're claiming 2, 2 times 2,000 equals $4,000. So therefore, you're going to determine you have 2 dependents okay, this was supposed to be 1 dependent. I don't know why I didn't make that change. But you claimed 1 person, right? She had only 1 child. And therefore, here we claimed that we're looking at how many pay periods per week. In this case, she's getting paid every week. So we're going to look at this table right here. Table number 5 is going to determine, right, if we're on a weekly payroll period. Therefore, there are 52 paychecks that she's going to be receiving. So what you're going to do is you're going to determine how much per paycheck is going to be that dependent. So we're going to take our $2,000, because that's for that 1 dependent, and we're going to divide it by 52 to give us a total of $38.46. So what we do this $38.46 is, this is what she's going to claim on her paycheck. Therefore, this is going to be deducted from the tax. All right? And once we deduct it from the tax, therefore, she is subject to still have to be paying $11.13. Okay? Back then, if you've claimed any children, that is going to be a tax deductible before you figure out what your taxes is. Now, for the 2020 and the 2021, it's after you get taxed. So in this case, if you claim 2 children, you can pretty much not pay any taxes to income, because it's going to be 0. All right. So there's the example here. All right. I'll make a few changes to this and I'll upload a new one. But it's 1 child. Okay. And again, it's going to be for $2,000 divided by the number of pay periods there are. So in this case, per child, per paycheck is $38.46. So therefore, you're going to take that away from the withholding to get you a grand total of $11.13 for the withholding. Okay. Everyone okay here? So this is your final number. Is your total federal income tax withholding is going to be for a total of $11.13. All right, any questions?
No.
Okay. So once again, here, if step 4, right, results in a number less than 0. So once again, if I claim 2 children, like that one example, right? If I actually claim 2 children and it turns out to be a lot more than that, then and you try to deduct it from your earnings, right? Or the tax that you're supposed to be subject to pay, right? If it's a negative number, you're just gonna make it 0 automatically, because that means you pay no income tax. Okay. All right. So that was figuring out federal income tax withholding. All right, any questions? So here, for the example here, right, then you're going to add the last thing, which is any additional deductions. So once again, if you didn't fill out step 4 in page on your W-4 form, which is claiming any extra deductions or extra withholdings. In this case, there's nothing there to claim, so therefore you don't need to add anything. So the total amount of withholdings that she's subject to have to pay is going to be $11.13. Okay. All right. So then that is not all you calculate. That's just the individual taxes. Now, what the employee is also have to do is they have to pay into their own Social Security and Medicare because that's a federal Insurance Contribution Act. Okay, so once again, also known as FICA, not FICO. That's completely separate. Okay, FICO is your the amount of your score, right? In this case, this is the Federal Insurance Contribution Act, FICA. Okay, and what this does is it pretty much is basically your Social Security and your Medicare, right? Right now, we're still paying into it, okay? For now, we don't know what will happen in the future. This could be something that a lot of, if you've learned in history, that it could be something that could be getting rid of. But right now, it's still going on. So as it is a federally type of tax that you have to pay, it's mandated. You cannot not pay into it. Okay. Now, of course, depending on which company does actually pay into it, is going to be responsible for you to have at the end of your retirement, so you have money to have while you're not working. So here again, old age survivors in disability insurance, which is also known as OASDI, which is also known as your Social Security, right? In this case, it's a straight rate of 6.2%. Okay? And you can only collect up to $142,800. Okay? So there's a cap limit on how much you can claim. Now, of course, if you're a minimum wage worker and you're doing 6% per paycheck, right? You will never reach that cap, no matter how many years that you've worked, right? You'll be working for 20-some years, you would probably barely hit half at most, right? So that's why, this cap is there, because most of the people that work in the United States, they're more likely to be, minimum wage workers, or, there's only so many few that actually have high paying jobs. Okay. So for those who do have high paying jobs, then that's why, the longer that you work there, the more benefits that you can claim. Now this, once again, it's standard throughout everything, because this is a federally type of tax that you have to charge for all employees. You are mandated to have to pay into their Social Security. Now, again, this is the employee standpoint. They must pay into their own Social Security. Okay. How we figure that out is going to be based off of the total gross earnings. So if L, if she earns $15.25 and she works a total of 45 hours, therefore $686.25 is her total gross wages, right? We're not going to claim any adjustments to it. It's going to be the straight gross wage, and then you're going to multiply it by the 6.2% to give you a total of $42.55 that she's going to pay into the tax. So take a look at that. Per paycheck, it's only $42.55. So that's what roughly $45 per paycheck. And if she gets 42 of those, 52, you could see how long is it going to take to reach that $142,000. It's going to take her forever. Okay. And of course, when we come over to hospital insurance, also known as your Medicare, right? As we all know, when you leave the workforce and you are retiring, therefore you need some kind of way to, pay for your medical bills. So this is for anybody who's disabled or old age or retired. If you pay into your Medicare, then you'll be protected. Okay. So once again, hospital insurance are also known as Medicare, right? It's going to be at 1.45%, which is a whole lot of nothing. That's very, very small. Okay. So once again, it's a very small percentage, but I mean, it's better than nothing, right? There is no limit to how much you can put into it. And what we're going to take a look here is that the example as well here is that when you calculate your Medicare, it is going to be based off of the total gross earnings. So in this case, same scenario here. We are looking at the gross earnings at $15.25 for 45 hours. And there you go, which is the total amount here, the $686.25. And we're going to go ahead and multiply it by that 1.45% to give you a total of $9.95. So once again, that's nothing really. $10 for every paycheck. And if you earn 52, what is that, $520 roughly for Medicare? Yeah. That's not that much. Okay? Especially when we look at how much medical bills tally up to. Okay? So once again, these are the most that you will be taxing as the employee. Okay? These are the taxes that the employer is subject to withhold from an employee's paycheck. So once again, we're going to go ahead and we're going to journalize this. So here's the expense account that we're going to take a look at. It is called salaries and wages expense, right? This is going to be their total amount that they've earned from your company, right? So here, their total amount that is going to be $686.25, right? And then all of these are going to be things that you're withholding from their paycheck because they must pay into it. So first thing is, they're going to take away the $11.13 for the federal income tax. Then they're going to take away $42.50 for the Social Security, all right? And then they're going to take away another $9.95 for Medicare. And then therefore, once you take that away from the paycheck, you are now left with $622.62 to write the check to your employee. Okay, so once again, because we're in the state of Nevada, these are probably the only 3 taxes that you will see unless you have any benefits or deductions that you offer. But this is the bare minimum, okay? Because if you don't offer any benefits or anything like that, then whatever the federal taxes are is what you're only going to take away from the paycheck. So this person earned a total of $686 just to only walk away with $622. Okay? So once again, because she didn't claim as a regular single person with nobody, like not claiming anybody, she could have easily gotten $48 taken away. Okay, but she claimed a child, so therefore she saved for $38. Okay, and that's how you calculate that. Okay, now notice this. Why is my federal income tax a payable? Why is my Social Security a payable? And why is my Medicare a payable? Because this. Oh, go ahead.
I was going to answer the question. No, go ahead.
No. Go ahead. Answer the question.
It's a payable because you're going to be paying it to the government. You're just taking this from Ellie, and then you're going to be paying this back to the government.
Correct. It's not money that you own, okay? It's money that you're holding from her paycheck to pay for the government themselves, okay? So that is that right there, okay? Yeah, it's just a placeholder account because instead of paying Ellie the full amount, you're withholding it because that's your responsibility to pay for Ellie as a company. You need to pay into their, paycheck because she's making the payment to you to pay the government. Okay, so that's that right there. Any questions on how we calculate that?
It was a lot to take in, but
It is a lot.
we do do the exercises because it was just like full mouthful, like trying to follow it.
Mm-hmm.
So I think maybe once we do the exercises,
Mm-hmm.
it'll make a little bit more sense.
Mm-hmm. Now, I don't think we have enough time to do the exercises because there's one more section that we have to deal with, which is the employer standpoint. Okay? So this is just just calculating the employee just themselves. All right? We still have to talk about the employer side. Okay? All right? So we will probably we could do the exercises tomorrow. So that could be the second thing that we do after our review for the exam. Okay. That's just if we have enough time. Okay. But that's just the employees' taxes. Okay. So now that's just this, and this is exactly why it's just so much easier to just pay someone else, some payroll company to just do it for you. Because if imagine that you have to go through every single individual person, look at their W-4 form, and determine what bracket they belong to or what percentage they belong to. Imagine that. If you have 20 employees, you can already think it's going to take you a long time to go through every single employee because every person can claim difference on their W-4 forms. Okay. So now that we talked about employee taxes, let's talk about employer taxes. So again, as an employer, we have our duty to pay for our employees. So the very first thing is we need to match them for their FICA, right? If they put in 6.2% for the Social Security, we have to match them 100% because we are supposed to protect them as well. Okay? So in this case, whatever that they put into their FICA, we have to match them 100%. So in this case, if L earns the $686.25, we are subject to pay whatever amount of Social Security and Medicare that they've claimed. So in this case, right, it's still going to be 6.2% plus the 1.45%. So in this case, just to make it a little more simplified, you can keep it separate. It's fine, but there's no rule against that. But if you want to make it simple, right, because this is not the only company tax that we have to pay, therefore, right, you can add the two numbers together to get a total of 7.65%. Okay, and once again, if L puts in a total of $42.55 for their Social Security, and she also puts in $9.95 to her Medicare, you are also subject to pay in the same exact amount, so $52.50 to her Social Security. Okay, that's the first thing you got to do as a company tax that you are mandated to pay. You must match them 100%. Okay? So here, we've already calculated that. That's just one tax that we have to recognize, right? Here, since the calculation was already done from the previous section, all we have to do is just bring those numbers back down because they're already calculated. Okay? So that's the very first thing that you have to compute for a company taxes. Whatever that they paid into their Social Security and Medicare, you have to match them 100%. Okay. Second thing that we're going to talk about is going to be FUTA, which stands for Federal Unemployment Tax, as well as SUTA, which is the State Unemployment Tax. Now, for those who keep claiming that you guys as the employee pay into your federal unemployment, you're wrong. You don't pay a dime to anything to the unemployment. The company is responsible to pay for it. So if they don't pay into the unemployment, that's their fault. So therefore, you can't get your unemployment, which is unfortunate. Then unfortunately, that's not a you problem. It's the company's problem. They never paid it to it anyway. So that's one thing that the IRS does get onto the companies for if they don't pay their federal unemployment tax, they can be subjected to a hefty, hefty fine for not paying into unemployment. Because again, the way that you pay into it is by your time. Okay, so again, this is measured based on what the total earnings is for each employee. So every employee, right? In this case, it could be anywhere from 0.5% to 6%. Okay, and this is all based on how many employees they have and how often they need to pay their taxes. Okay, so most cases for small businesses, they can get away with paying their taxes at the end of the year because they're just such a small kind of company. They're not going to be generating that much income tax, or they're not going to be generating that much employees enough for them to have to pay like every tax time. So they're able to get away with paying every year. Whereas a corporation who has 1 billion employees, you can expect that the government's going to go after them. They're going to make them pay either at the end of the week, depending on what kind of corporation you are. So if, for example, Walmart, they have to pay every week, okay? Because they hold 1 billion employees. And the best way to go after the money is going to go for someone who has that type of money that are paying billions of employees, therefore collecting $1 billion in taxes. So you can best bet that most smaller companies, they can get away with paying their taxes either quarterly, semi-annually, or even at the end of the year. Whereas many major corporations, they have to pay that every week. Okay? So with that being said, right, depending on the size of the company and how much money you owe is going to determine what kind of percentage value you are at. So it just for this class and this class only, I'm only going to have you remember 6, okay? Because once again, it's depending on the size of your company and how many employees you have and how often you need to pay. In this case, I'm just going to go ahead and just make it a sweet, simple number. Just know it as 6 for your federal unemployment tax, okay? And this is, again, it's a federal thing, so you have to report it through through the Form 940, which is the standard, taxes that you have to pay to both the federal and state, if not. So it's going to be the Form 940, okay? You may not need to know this just because if you're not planning to open up a company, then you don't need to know this because, again, this is for tax purposes only, but that is the form that you need to use to file for federal unemployment tax, okay, for any federal tax in general, okay, is the Form 940. So once again, FUTA, we're going to act as 6%, and it's going to be based off of the gross earnings, okay? And then, of course, we talk about state. Every state is going to have some kind of state unemployment tax, right? And then depending on which state that you belong into is going to determine, right? And in this case, it's anywhere from 0.25% to 5.4%. Now, if you do your research, right, in the state of Nevada, okay, any new form of business, right, is going to automatically claim 3% of state unemployment tax, okay? In the state of Nevada, it's also known as the state unemployment insurance. In this case, I call it SUTA, same thing. The State Unemployment Tax Act or, state unemployment insurance, they all are the same, just depending on what kind of state that you belong in to, but the general idea is it's state unemployment. All right, and once again, for this class, since we're assuming that we're creating a small business or we are a small business, I only need you to know 3%. Okay, so therefore, I'm making it a lot easier to help you calculate, but once again, this is definitely something that you have to go ahead and seek a professional tax accountant for, especially when you're dealing with payroll and you're doing it manually. You want to make sure that you don't cheat the government or you don't miscalculate and end up paying less tax than you're supposed to. So once again, seek a professional tax accountant. But in this case, for this class and this class purposes only, I only need you to know FUTA 6%, SUTA 3%. Okay? Right? And again, they're all going to be based on the gross earnings that the employee has earned. Okay? And then last but not least, other things that you can also tax is any, if you have holiday pay, vacation pay, and sick pay, of course, those are all going to be deductions or taxable, right? Those are things that you can tax for because they're compensations that you can claim, all right? Other than that, too, if you have meals or meals that you provide at your company, that could be considered something that could be taken away or taxable. So once again, those are additional things that you can be taxed for. But in this specific case, I only want to focus on one, which is a very, very key one, which is workers' compensation. Now again, workers' compensation, right? Most of you guys are aware of what it is. Once again, as a disclaimer, for a company, it's for them to protect themselves from their employees in case they get injured on the job. Because what an employee has is, hello, I got injured on the job, I'm going to sue the company. So what this company does is they set up an account called workers' compensation to protect themselves for in case they do so sue the company. So by protecting themselves, they say, hey, you got injured on the job, you know what? I will pay for you to go get training. I will pay your medical bills so you don't sue me. And that is what it is. Okay? So there's a lot of money that goes through workers' compensation, and what they determine is this is a random number. Every company has their own set of percentages. However, the one that's more frequently common is going to be 1.36%. So that's the one I want you guys to know for this class is when you calculate the workers' compensation, it's 1.36%. Okay? And once again, it's just a legal protection from employees suing the company. Okay? And they take this money because the worker, right? They dedicate their time. So on the side, the company protects themselves in case of any injury that happens. Medical bills need to be paid. Everything so then the employee doesn't sue the company. All right? So you may also have to before you have the job, you may actually have to sign a contract that tells you that you cannot sue the company for any reason because you acknowledge what the task of the job is, and there could be a possibility where you can get injured on the job. You may have to sign that waiver before you can even do the job. So that means, therefore, you're kind of at a rut. If you do get injured on the job, you can't sue the company. However, they have money to do otherwise to help you get retrained and pay for all of that. Okay? So again, this class, I only want you to know workers' compensation is 1.36%. So let's go ahead and talk about how we're going to calculate this. So everything that you see here is going to be based off of the total gross earnings. So for example, if L worked her job for $15.25 per hour and she worked a full 45 hours and it's weekly, right? Therefore, she earned a total of $686.25. So that's going to be the base for every percentage that you're going to be using, right? You're going to tax each percentage based off of that total gross earned income. So in this case, for FICA, right, we talked about this, right, Social Security plus Medicare, so it gives you a total of 7.65%, which gives you a total of $52.50, okay? Then SUTA, which we know is 6%, which is going to be a total of $41.18. And then SUTA, which is 3%, so which is half of that, is $20.59. And then, of course, the last but not least, you're going to figure out what the worker compensation is, which in this case gives you a total of $9.33, which you're going to go ahead and add those all up to give you a grand total of payroll tax expenses that you have to pay for per individual employee that you have working at your company. So think about it. Not only do you have to pay your employees $686, you also have to pay them $123 for having them as an employee. So that's twice the tax that you're going to have to pay, because not only are you supposed to be paying them for their taxes, you're also paying your own separate taxes. So you're getting double tax for having employees. All right? If you think of it that way. So in this case, boom. My employee that I just have to pay for just having L work at my place is going to cost me roughly $900 per paycheck. Okay? And think about it. That was just one employee. All right? We talked about figuring out their FITW. You also have to figure out what taxes you have to pay for having them as an employee. So think about it. Twice the work per individual. You have to do that for every single employee that works for your company. And this is why the big companies or the small companies pay the big bucks for some other company to do it for them. Because think about how many tax tables you have to have out. Think about how many W-4 forms you have to take out. Think about how much you have to calculate percentage-wise. Okay? So once again, and then you're going to have to journalize it twice. One for employee taxes and one for employer taxes. Right? Any questions in regards to how we figure out payroll?
Just a lot of steps.
It is a heck of a lot of steps. All right? So, once again, how we file our taxes, right? Once again, you're going to get the form 490 and 940 and 941, which is your primary tax that you pay to the federal government. So, now that we're living in the digital age, everything is used through electronic funds transfer. Okay? So you're going to have to set up that account. You're going to figure out what your payments are. So once again, depending on what kind of company you are. If you're a small company, you can get away with paying every quarter, every half of the year, or even at the end of the year. Okay? Corporations, they get hefty when it comes to having to make the responsibility to pay off their liabilities, right? For payroll, especially if we look at Walmart, for example, payroll is going to be every week. The sales tax is going to be at the end of the month, et cetera, et cetera, et cetera, right? They have different payment plans, and those are going to be discussed based on when you submit your 940 and your 941 form to the IRS. Okay, so once again, it says that you should start make payments as of January 1st of every year, and you file it again. But again, once again, it depends on your company, right? How big you are, how often you pay your people, your folks, and how much tax you're going to be collecting. Okay, so again, you can file it every annually, quarterly, monthly, or even every week. Okay. So once again, racking up these federal taxes, if you don't make payments on time, you can get penalized, and when you get penalized, you can also be subject to the highest tax rate. Okay, so it's very important that you make your payments to your federal, especially the federal. You don't want to you definitely don't want to fall behind on those payments, nor do you want to have to pay the highest tax rate. Okay, so as I mentioned before, right, the federal unemployment is 6%, and the state is already 5.4%. Okay, again, those numbers are general numbers that you can find anywhere on the IRS.gov, especially the state one, you're going to have to look at the state unemployment. That will give you more general information on how much a business has to pay for unemployment based on the state that they belong in. But once again, this form, you can find it on the IRS, right? Form 940. I'm not going to test you on this. It's just information that you should know in case you do planning on opening a small business, right? Best thing that I can do for you or recommend is if you want to learn more about this, spend some nice quality time looking at the irs.gov publication 15. Okay? Okay, so chapter review, once again, this is what we take a look at. We took a look at what type of employees there are, right? We got to take a look at what forms are very important, right? Whether it's a W-4 form, the SS-4 form, the 1099, 940, 941, etc., etc. Okay, once again, I linked it here when you go look up for more information. Once again, I'm not a tax accountant. Therefore, I don't know all the details. I've only taken a tax class. And on top of that, this is just a general class. It's not tax class. But all you need to know is that every year, tax changes every year. So you need to make sure that you look at that. Second thing is that we looked at is what the employees have to pay for, right? As well as the employers, okay? So once again, employees are subject to the federal income tax, which then brings you to the Circular E table, okay? Which you can get from irs.gov. I've posted it on the Google Classroom, so you do have a copy of it. But don't worry, every exercise, the test exam, I will provide the table for you. Okay. And then we looked at FICA, which is the Federal Insurance Contribution Act, which is your Social Security, which is 6.2%. And there's a cap limit to it on how much you can claim, so $142,800. And once again, we talked about Medicare, which is 1.45%, okay, which is your Medicare, okay? And there's no cap to the Medicare, okay? We also talked about employer taxes, which involve with FICA. So again, you have to, if they put into their Social Security and Medicare, you also have to match them 100%. Then you have the FUTA, SUTA, and workers' compensation. And then last but not least, again, we broke down what FUTA is, right? You are just mandated to know it's 6%. SUTA, depending on what state you are, in the state of Nevada, it's 3%. Okay? And that's it for today. Okay? Now, how we calculate the federal income tax is right here. Here's an example. Okay? And of course, this is how you journalize it, right? When you're dealing with the employee taxes, this is what you got to journalize. Employer taxes, this is what you got to journalize. All right, any questions?
But I'll probably think of them later.
Okay, so it's up to you guys. You guys want to soak in the stuff, and then we can come back at this tomorrow, or do you want to try to get through the exercise today, and then we'll visit the employer taxes, or we'll come across payroll when we do our fictitious business. Well, how do you guys want to do it? You want to try to attempt it today? We still have 30 minutes of time. If not, you want to sit and rest on soak it, maybe go through the PowerPoint once again. I need to make a few little adjustments on here, but I'll repost the new one. But as far as that, would you like to soak in the information and then we'll just deal with it tomorrow?
I wouldn't mind soaking it in, finish
Okay.
my notes and everything.
Okay. Okay. So let's go ahead and give your brain a little break. Okay. So once again, it is now